see what we can work with this morning. All right, that's done. Let's see, let's put that over here on the second screen. Good morning, Agent. Good morning, Kita. All right, earlier during the London kill zone, we took the short right here and initially the 2022 model long right here. We didn't continue higher, so I've been stopped out at break even here on this trade. Sorry for that noise in the background. Then I took the short to take out Asia sell side. We hit our targets on the higher time frame that we spoke about on the weekly outlook. Right here, those two 1 hour fair value gaps. And right now, well, earlier I've been in a long of this market structure shift. I moved my stop loss below this low once I saw that continuation move, and unfortunately here on ES we just kept on chopping around, taking highs, taking lows, especially prior to the New York Open. We had a little stop hunt one last time. We didn't violate our swing low, our current low of the day, so that still remained intact. If I would have kept my stop loss there, that would have been fine, but I'm still in profit for the day. Right now I'm just looking for, yeah, basically the range expansion into the buy side and then potentially our current buy side high of the day. Similar to what NQ has already done. So we can see right here on NQ, we never had that issue. We had our market structure shift. I didn't enter on NQ, unfortunately. I took the short on NQ earlier this morning. Right here, if we check it out on Discord and hover into the VIP area, trade ideas. Tape reading. Yeah, that was the market structure shift long. And then I tried to, get the short, and I entered on both NQ and ES on my funding pips 50k challenge. And I really enjoy trading CFDs. I did not expect that I'm going to say that, to be really honest. But as of right now, don't have any issues with it. Risk management, lot sizing and all that stuff works perfectly fine. And yeah, now I want to see if ES wants to continue higher and eventually leave this range. So yeah, just by the looks of that, London and early New York really hasn't been, or has been, what we would expect for a pre-CPI, pre-FOMC Monday. And we already said it this morning that we're gonna take it very slow, no rush at all, and yeah, see what we get. We tried it. I'm up right now on my funded account 150 bucks because I've been stopped out right here, unfortunately. So here we had that last sweep. And we have it, sweep. Cleaned that up. Then we reverse back to the upside, but we still have buy side targets to the upside. Right now we're still rejecting of our new week opening gap right here, while NQ is already all the way up here. So that's interesting. We will keep an eye on that. If we take a look at the 1 minute time frame here on ES, we can see that all we do is go sideways. Usually if we go sideways, just below liquidity before having taken that out, we tend to expand into that direction. I already positioned myself long. I will manage the risk on the go. So my average entry came in just right here. Immediately after I got home from the vet, I took my dog to the vet before I started the live stream. That's why I'm running a little bit late, and that's why I couldn't manage the trade, unfortunately. But now with our first buy side target, that would be London buy side. London buy side liquidity, top right. Make that 12 big. And here we have our high of the day. Buy side liquidity, 12, top right. And here we have our low of the day. Not a big range at all. But it's nice to see that we reacted from the areas where we wanted to, or where we expected a reaction from. So yesterday, we were doing the weekly outlook. I also uploaded that to YouTube. where we were looking for potential support on these highest 1 hour bullish fair value gaps to potentially continue higher. The only difference that we saw is that right here at 4 p.m. 6 p.m. New York local time on that new daily opening, we already cleared our previous week, previous day's high. We went above that, then we continued lower, retracing into those areas, tapped our lowest 1 hour bullish value gap and immediately reversed. That's why I really liked this 5-minute setup here with the market structure shift. A nice strong displacement, but yeah, like I said, unfortunately not able to manage the trade live. Otherwise I would have maybe left one position open. It doesn't make a difference if I'm getting stopped out here or here. I had this unfilled volume imbalance, actually a double volume imbalance. Now that we see it in hindsight, we tap into that one more time and we expand to the upside right at 9:35. Let's see if something would have been visible. Good morning. On the 1 minute time frame, no, we only have a fair value gap coming in right here on the 1 minute time frame. But we keep on going sideways just below buy side liquidity around our new week opening gap. That's interesting. Let's check out the 15-minute. We have two bearish 15-minute fair value gaps above us. Really, that shouldn't be too much of an issue to push through it, especially seeing how easy it was for NQ to push back above our previous week's high. And here we can also see that early in the morning, so basically 6 p.m. on Sunday, New York local time, ES did clear Friday's high right here at 3:35 p.m. And here the high at 2:50 p.m. Friday's high. If we take a look at Friday's price action, that's Friday's high. We didn't manage to take that out. Then we continued lower, went sideways, chopped for a little, had a last stop run, shift in structure, breaker block, all that stuff kept on holding perfectly. And we had a nice off our breaker block right here. Yeah, 100-point move to the upside. While on ES we're still struggling inside this tiny weeny little 10-point range from London. So we still have our London session high and London session low, London session low and London session high in place. We haven't left that range yet. So that's interesting to me. 15-minute, 1 minute time frame. A bunch of equal lows sitting right here. What's the time? It's 9:54, so that next candle is going to be a new 5-minute candle. Let me draw up the breaker block here quickly on NQ. That's our breaker. Breaker, breaker, money maker. Let's go. Perfectly respected. God damn it. So let's see. I want to see this fair value gap right here be respected on ES. Otherwise, well, we're not going to continue higher. That's for sure. Paired with the midnight level here, this dashed line. Let me draw this up. Bullish fair value gap. And also this little order block, if we can call it order block. Kind of tricky. Let's see how we're closing on this 1 minute candle. Watch the 5. Still stuck in that ugly range. 1 minute time frame. We have equal high buy side right here at the high. We kept on respecting the midnight level paired with the bullish value gap. Like I said, that's going to be my area of invalidation. here for ES. One last stop hunt before we maybe continue higher. That's what I would be framing here. We don't have any other fair value gaps to work with to the left other than a inversion fair value gap, but this already hasn't been respected very nicely. So now I want to see bounce off the midnight level, bullish fair value gap for me to remain bullish. Otherwise I would flip my bias to look for further downside. Since we're just chopping in this little range, and now we open with a gap below the midnight level. Not a good sign. We retested the fair value gap, but we didn't close below it yet. Yeah, I think we failed to hold this area. Take a look at NQ. Unfortunate. Very unfortunate. But let's see. We just started the New York session. Another bearish volume imbalance, and now we actually got to close below, but kind of a nice rejection wick here. Still not really what we would like to see being in the long, but look at that rejection. So now staying on the 1 minute time frame, we have a inversion fair value gap and a bearish fair value gap just above it. Could have stayed in my long, but it's better to follow the rules, especially if you get chopped around. Yep, like this. That's not nice, but that can happen in a range bound market. Bearish fair value gap. Maximum pain for all these people trying to get in on the long because they saw NQ flying basically. We disrespected all the inefficiencies. So valid enough to assume that we're gonna revisit the lows. Well, this kind of negated it, and that's where I jumped in. I jumped in right here on this price level at 4569 on my MT5 funding pips account. I'm in with the momentum with 2 lots right now, managing the risk actively. I'm doing it over my phone actually. That's a big change, because usually I trade it with Take Profit Trader or Apex right on TradingView. I'm not doing that for the rest of the month December. I'm gonna settle on that and see how I perform on my funding pips CFD challenge, just out of curiosity. So we just hit that London buy side target. That's taken. Buy side liquidity taken, and we open up with a bullish volume imbalance. Let's see how that goes. Triggered buy stops. Now we're back above the new week opening gap. Let's see. Go to the 5 minute time frame. This is now the new hourly candle at 10 AM. So if we go to the hourly time frame, we can actually see a bullish volume imbalance also on the hourly. We just rebalanced our previous hourly candle high, closed above the new week opening gap, the current new week opening gap on the hourly time frame. Same story for the 15 minute time frame. We still have these 2 15-minute inefficiencies before we could potentially revisit our high of the day. So from the 5 minute perspective, it did the damage. We can take a look at our highest 5 minute bearish, because we're in that right now, and focus on that. We also, for the first time today, close above this tiny little bearish value gap. Right here, you would assume that we close above. No, we only open above with a volume imbalance. And now we actually closed above it. So let's see if we can hold support around these areas on that 5-minute time frame. Check out the 1 minute. We have a couple of inefficiencies. So this is our 5-minute stuff. So far also respected on the 1 minute time frame. We have 2 inversion fair value gaps right here. Let's get rid of this one. I don't like fair value gaps that haven't been respected. Interesting. Our shorts on EU played out and hit the Asia session low, or the low of the day right here. Maybe another fake pump and dump. Wouldn't surprise me, to be really honest. That's why I'm saying I'm managing my risk actively. We're very volatile right now. Inversion fair value gap, coupled with a tiny little bullish fair value gap paired with the new week opening gap. We close below. Looking more like a pump and dump to me, if we're being honest. Fake out longs one more time, and now we're going to revert it back to the low. Let's see if this bullish value gap right here can hold support, or if we're just going to collapse. Right now I just have the feeling we're going to collapse here on ES. We are playing within the range. We took out the high. Now we're looking for the low again. But let's see. Could also be wrong on that assumption. Right now the 1 minute chart on ES is not really giving. Go to the 5-minute time frame. Yeah, no fun to trade this right now, that's for sure. While staying in the range, I think I might just hold back for a little. But we keep on respecting that 1 minute bullish here. Let's see how we go. Go back to our 5-minute time frame. 15-minute. Another bullish volume. Yeah, bullish volume imbalance right here inside this inefficiency. Let's wait for the first 5-minute candle actually close and immediately back below the new week opening gap. But guys, it's not really telling us much. Within a range, we see fair value gaps being respected, not respected, and like for example this one right here, there's no point in looking for perfect price delivery within a range, within a 10-point range especially. Most of the time we're just better off sitting that out. No, I started it last week Thursday, the Funding Pips account. I'm working on it right now, but it's not passed just yet. Right now I'm sitting at around $1,000 in profit. While NQ really would have been the more giving chart to trade today compared to ES, well, you're always smarter with hindsight. Right now, yeah, still respecting the inversions. We close below, but open back at the low again. So that's still fine with me. Let's see if we want to make that push for our 5-minute bearish, or if we're just going to keep on chopping around. We have the potential for a internal head and shoulder setup, left shoulder, head, right shoulder. We'll see if we get that push. Now the next area of interest is if we can get a close above here. Nice rejection wick down low. See similarities. EU is also pushing to the upside. Failed to take out previous day's high. Take a look at NQ again. NQ just keeps on going up. One push, two push, third push. So we have that SMT divergence going on. Just follow price. There's nothing wrong trying. Well, just do, what you usually do, and then maybe use a little bit lower risk. I mean, if you keep on hitting that 40 or 50% win rate with a healthy 2-to-1, there's nothing wrong trading during December. But if you gamble and over leverage, well, maybe not the best trading conditions during December. I'm not a fan of seeing December out, at least until something like the 19th or 20th of December. So just before Christmas. But until then, should be fine. Just do what you did to pass phase 1 of your challenge, are rigged, and see how it goes. I mean, in reality, if you're a good risk manager, you have 10% drawdown, maybe just risk 0.5% risk, a little bit less than usual. You only have a 5% target. That's a 2-to-1 profit target to drawdown ratio. Go to the 5-minute time frame. Let's see how we close here in 40 seconds. And right now we have equal highs, a new higher closing candle. 15-minute time frame, last 5 minutes on that. 1 hour time frame retraced all the way back into our 1 hour bullish fair value gap, and on the hourly time frame we see how well we have respected that. 5-minute time frame, let's drop it back to our 1 minute. Yes, makes sense. I've been trying to pass futures combined for a couple of months now, but the drawdown to target always seems too tight for me, and I ended up hitting trailing drawdown most of the times. Yeah, that's biggest issue with future funding firms, the trailing drawdown, especially with Apex, the live trailing drawdown. It's tricky. It's very tricky to beat that. You have much more room to breathe on a CFD challenge with a 10% static drawdown, in my opinion. And that's why I'm testing out. gave a try with CFD and passed the phase 1 with 5 MMXM trades. Awesome. Can just keep doing that. If you see a nice MMXM setup, market maker buy or sell model, then take it. There's no reason to say or to be scared of just because it's December. If the pattern's there or the setup is there, then yeah, my best advice would be to take it. Manage your risk well, and yeah, maybe your win rate's going to be lower, but it's good practice. Not going to hurt you. Lower your risk, manage it well. Not much you have to be afraid about. Let's take a look at the DXY and EU. And switch over to NASDAQ here. NASDAQ also keeps on holding on that highest bullish value gap. Now, I don't have the time to go on the higher time frames now. We've done that on the weekly outlook. Yeah, I also agree. The spreads on funding pips, especially on indices, it's phenomenal. Like really, really, really good. I'm doing my review right now. I've been trading with MFF back in the days. Spread was okay, not terrible, not perfect. I've been trading with FTMO and with the funded trader. The funded trader, worst out of all the CFD funding firms in my opinion. Don't like them. That might be an unpopular opinion. If you do like them, they do great marketing, so the probability of you liking their stuff is very high because they seem friendly, podcasts and all that stuff. But that's just a picture they put out there. That's what people call marketing, especially good marketing. Always think about that. And yeah, didn't like it. So I decided to try. I heard about funding pips and I saw that it's actually the cheapest CFD challenge out there. Hang on, let me put it on my main screen. It's also in the YouTube video description and live stream description. If you want to support the free live stream, feel free to use my affiliate link with funding pips. I really think they're a good prop firm. Nothing wrong about them, at least as of right now. Of course, I don't know what's going to happen in the future. Everything could happen. But it's only $399 for a 100k account. And with my affiliate link, you get a exclusive 5% discount. They don't really do many discounts because it's already the cheapest 100k or 50k challenge already compared to FTMO, the funded trader and all these other companies. And they have a nice dashboard and everything. If you trade CFDs or if you want to try trading CFDs instead of a futures funding firm, well, I can recommend funding pips without any issues. All right, let's see if we can manage to push through this bearish value gap here on the 5 minute. NQ also made a new higher high. Go to the 5 minute time frame. A bullish volume imbalance. Let's see. Not really a nice chart to trade today, so let's just say we took out the equal highs and now we're starting to pull back again. Look at the DXY. Not really looking for correlation there anyway. I also have now that I talked about CFD challenges a little bit, I created this CFD prop firms comparison sheet. It's in my most recent upload where I talked about CFD funding firms. You can find that link below that video, where I compared the spreads on EU and S&P 500 mainly between all the different prop firms, and actually the best spreads on the S&P 500 happen to be right here with funding pips, with a fixed spread of 3 pips, compared to FTMO with 4 pips to 5 pips, 5%ers 4.5 to 7 pips. That's why I decided to sign up with them and to test their service. Take a look at NQ. Q is consolidating up here, similar to what we saw on ES right over here. Go to the 5-minute time frame. I think the probability is here that we see a new high for the day on ES, but first of all we have to push through the 5-minute bearish share value gap. We now hit the consequent encouragement, and we're starting to retrace aggressively. No, not aggressively yet, but get the idea. Here's a short-term low, could be taken. Back to our new week opening gap and a new bullish share value gap. So my focus is on this lowest bullish share value gap. It's my area of invalidation for longs. See that? Very typical. That's why I'm holding back on closing any open positions. We're still respecting the order flow. And there we go. Quick sweep, similar to what we saw right here. So we could draw this up and label it as a sweep with that huge rejection wick to the downside. A quick sweep, still respecting the new week opening gap, leaving behind a nice pin bar candle. Let's see if that's enough to push above our consequent encouragement here and maybe into our high of the day. Looking at our last manipulation to the downside, I would really label it to be right here. So that most recent lower low, lower high, lower low. Never broke that. 2.5 standard deviations before we make it into our previous week's high, previous day's high, Friday's high basically, and our current high of the day. 4 standard deviations would deliver us into the 4674 region, and if we turn on our daily analysis, you can see that would be right around the 50% of our daily bearish share value gap. We've been mapping that target out yesterday during the weekly outlook. We took out the high here again. And we reject. Let's see if we can get maybe a first 1 minute candle close above the 50%. Then we can wait for a 5-minute candle to close above it. Because it's a 5-minute bearish value gap, I would use the 5-minute time frame for more confirmation. Let's take a look at NQ. NQ, we have potential SMT divergence right here. Higher high, lower high. So we're gonna watch out for that. Good to be aware of that. Yeah, terrible price action today. At least on ES. What's the time? It's 10:20. We have SMT divergence right here. Like said, invalidation for longs would be this bullish fair value gap. If we fail to hold it after sweeping the low here already, then I would be looking for more short-term sell side to be targeted and potentially the low of the day. But until then, yes, you could play the potential SMT divergence setup, but right now, at least for the 1 minute time frame, you'd sort of be going against the trend. I'm not a friend of that. Can keep an eye on NQ here to the right and zoom in here. Back to revisit this bullish fair value gap. Close below the consequent encouragement could be an early indication that we might not gonna hold support here. $10.23. Back inside this volume imbalance right here. So if we reject from that area to continue lower, be early indications for bearish order flow. We're just gonna watch here, sit patiently. But at the moment, that's the reason why I said maybe fading or trying that SMT divergence setup before we break below this area. Of course, it offers a better risk to reward ratio than getting in here. But you have to pick and choose one eventually. The risk, therefore, by taking the short with the SMT divergence here would be much higher. We've respected the level right here. It's just tricky. I wouldn't recommend to trade in this environment. Hit our new week opening gap again. Let's check the 5-minute time frame. Volume imbalance on the 5-minute. Still respecting it. But we got our first close below the 50%. $30 to go. Now we have equal lows right here. And potential bullish SMT if we compare ES to NQ. NQ didn't take out the slow just yet. That's why I'm saying potential, because not confirmed. All we have to do is break the low, and then there's no SMT divergence anymore. We have the SMT right here at the high. Do we? Yeah. Right here with these lower highs. Let's see if we get the close below. Nope, we're still holding. Bullish volume imbalance, playing around the new week opening gap. Let's log into our paper trading account here so we have something on the screen as well. Just in case we see a nice or half decent entry opportunity. Okay, and Q pushing. It's rising. So right here, bearish SMT compared to ES. And bullish SMT right here also compared to ES. Close again at the high of our bullish fair value gap, 5-minute time frame on both charts. Yeah, no fair value gaps to work with on the 5-minute. That's most of the time a good indication that we're maybe not in the best trading conditions right here. So now we actually cleared the low on NQ, but we didn't yet on ES, so that let's see. New week opening gap, what can you do? Do you want to hold? Are we going to break? Five, 4, 3, 2, 1. We close below, but we immediately open back at the low. So when I like to give it a second chance. Five-minute time frame. Let's see if the 5-minute wants to hold the new week opening gap. I would look for that as a validation. If we close below, yeah. We also close below it on the 1-minute time frame, and then I would just leave it at that. But this doesn't mean that we have to continue lower. It looked like that a couple of times already with those rejection wicks to the downside. Yeah, just tricky to trade overall. So we cleared the equal lows. Let's see if that's enough to push back into buy side, or if we're going to remain in that bearish order flow and keep on heading lower. Still didn't close below our 1-minute bullish. Once we see that, we could maybe use it as a inversion fair value gap to continue lower. But this is just like, tricky. So now we actually close below. Don't copy my trades right now. Like I said, you'd be better off not taking any trades within this price action. Like we said, if we're range bound, usually we do not tend to respect inefficiencies. Tomorrow we have the CPI news event, and on Wednesday we have FOMC news with high impact. So not really a type of trading day Monday without news to lose all your profits on. So we've respected our inversion right here. Let me actually get rid of. Now let's leave those two ones here. We're in the short. Yeah. 5-minute time frame. Where did we close on the 5-minute? Let the indicator load up here quickly. Still inside the new week opening gap. So we're not done just yet, in my opinion. This would be a potential break in structure right here. Back closing above the new week opening gap and the high of our bullish or inversion fair value gap. So at this point in time, could take off one contract here, buy one. All right, so now we're stopped out. Long is still in play. Tedious, that's for sure. Let me open up YouTube here again and put it on my second screen. Thank you. I appreciate the feedback. I haven't seen many reviews of funding pips, so I decided to do one. Might help a few traders out there. Higher high, higher low, higher high, higher low, higher high. So still remaining in that bullish order flow. That would be the next high that we would be looking forward to break. And maybe get our first close above the consequent encouragement here. See if we can hit that. Yep, we got our first close on the 1-minute time frame. Let's see if the 5-minute ones. Oh, the 5-minute also closed above the consequent encouragement. Not done just yet. We have equal high buy side. Take a look at the 15. Good. Retrace into that. Here we have slight bullish SMT divergence. Internal though, not my favorite type of SMT. You can see that NQ retrace much deeper compared to ES. Higher low, lower low. See if we can push above here. Yep, we pushed above. Let's see if we can continue to push, or if we do what we've been doing every time after we hit buy side. Pull back. 5, 4, 3, and push back. Didn't get that nice close above. Volume imbalance. Let's see if that bullish value gap wants to hold, or if we just keep on doing what we have been doing. Wouldn't really surprise me. Stop loss would go for me below this low. Take profit target. Not the best risk to reward ratio at all. At all. More SMT divergence between ES and NQ. ES forming another higher high, while NQ formed another lower high. Let's see if we want to hold this highest bullish value gap. Right here, 4461.75 would be the low. If we take out that low again, I'm just not really interested in price action today anymore, and I'm calling it a session. Really not favorable here, so yeah, we close below the bullish value gap. Well, not that it's in. So far, we haven't respected any of the fair value gaps we left behind. That's really when I like to call it a session. No matter if there's still potential to the upside. So guys, feel free to ask me any questions now. That would be the perfect time to ask me, because I'm planning on ending the stream soon. Nice. Well done. Anyone on YouTube with a question? Otherwise, yeah, that's gonna be the end for me. I'm not really interested in trading this job. But until we shift structure or we confirm a structure shift, I would still be looking for higher prices, to be really honest. But we've seen it before, like, okay, we take out buy side, we pull back, take out buy side, pull back, take out buy side, pull back, take out buy side, and we're doing the same thing over and over again. Not really worth it to me trading that. Potential is always there, but this doesn't mean you always have to be in a position. Let's see, that's that last level of defense that I'm looking at. This bullish value gap right here, paired with the new week opening gap. Otherwise, we're gonna target this low one more time. Thanks for the feedback, Richard. Or rigged, that's it. Still holding it. Maybe tomorrow with CPI news we get some better price action. Yeah. Let's see, 30 seconds to go, but now we're below. Now we're back at the low. Alright, that's it. We close below those fair value gaps. I would look for lower prices. So yeah, thanks everyone for joining in today. Unfortunately not the most willing price action, at least here on ES. We've really, yeah, had a rough time here. DXY continuing higher. EU following price action nicely. Resistance on the new week opening gap. Gonna do a recap later on that on the Discord server. Alright guys, thanks very much for joining in. And I will be back tomorrow for a CPI New York session tape read. Alright guys, take care and enjoy the rest of your day. Bye.